This is Paul's Drockton's latest article. It's October 1st, I believe, yesterday, October 1st, 2011, Saturday, where he's, I think in a previous article on the 29th of September or 30th of September, he talked about the options. There's been greatly increased open interest on the put options for the S&P 500. In this article, he makes some specific recommendations as to what stocks to short. Am I doing this? No. I'm sticking with cash I have, and I know how long that lasts and whatever kind of emergencies I might have, and sticking with my positions that I have, primarily in physical precious metals. But I think his recommendations are pretty good. I mean, actually, you're probably, he asked for a small fee of $10 to go to PayPal. You know what? Most people charge a whole lot more than that to get this kind of information. He's talking about the financial psychopaths, or whatever he's talking about, trying to get your money in the stock market by bringing it down. But I'm going to tell you one thing. If you have money in the market, and you should always have a attitude that, you can wait out dips. Because if what they're doing is they're scaring people a lot of time. I don't know I think it is a psychological plan actually to scare the crap out of people. They make a lot of rash moves up and down and stuff like that. You're better off just sticking in one spot if you are in the right place fundamentally. Trading in and out, I think I do that a little bit, but when something goes a little bit too high, I'll pull some out. I'll do that, but I try to use reason. In other words, common sense. If something hit a record high, you might want to take some of that out and take some cash. That's a smart, common sense thing to do. But not to jump around too much if you're in the right areas. Keep researching why you're in those areas and look for information as to if anything changes fundamentally. But he's saying open up an online trade account with E-Trade or Scottrade. Get approved to trade stock options. Fund your online account with a few dollars. In other words, I don't know, I guess you need a minimum of 500. Put options in the companies I recommend in these articles, on my radio program. And this article and also his radio program can be heard on rents.com. So, I said before, I think there's some exaggerations in this, but I don't know. I tell you the truth. There's other people saying this, and looking at the euro problems, Europe is tied with us. The markets could go down, but I'm going to say some of his specific picks. He's saying to put options against J.P. Morgan Chase, Morgan-Stanley, Exxon, MGM Resorts. I don't know about these two. I tell you the truth, I don't know. But as far as J.P. Morgan Chase, they've been in a downtrend all year. I think they're in trouble from the kind of securities they hold in the mortgage area, and Morgan-Stanley especially. Everybody's looking at silver, but there's a lot, and I don't even know all the specifics because I read things and I forget what I read, and I just can't remember everything. I mean, I think 90% of the people out there are very good in certain areas, in certain specific areas of their field, and they can talk a good line. But I don't think anybody even knows exactly what's going on. Their whole game in these professional fields is fees, and the reason I'm not going to. Actually, I'll commend this Paul Drockton, because for him to ask for $10 for this information is that's pretty cheap, That's pretty cheap. Or maybe if you win, you pay him the money after that. If you want to do that, because that's really minor compared to the kind of fees these people charge, the professionals and these people charge that run these corporations. As far as the banking crisis, the SEC probes over mortgage loans, and I read this, I think it was in 2009, about the Royal Bank of Scotland. I forgot who was in charge of it. He had to resign. Credit Suisse having a lot of problems. It was a big surprise because these two thought they'd never have problems. It was over the mortgage loans. But also J.P. Morgan Chase, same thing. It's not just silver they have problems with. Having a short position in silver. UBS, Union Bank, Switzerland, Deutsche Bank, Goldman Sachs, Bank of America, Morgan-Stanley. Morgan-Stanley, I think, has more problems than J.P. Morgan Chase as far as the mortgage-backed securities. This is an article on the subprime crisis, and you can get a very good timeline on it. It's a lot to read. I go over this stuff, I read it, and I don't watch any TV. I actually read stuff like this for fun. I get into all different things like this. I don't watch any of that crap on entertainment. But this actually is a very good short synopsis of what happened during the mortgage crisis. And during the time, everybody's saying, "Oh, it's in a bubble, but how long will it last? Oh, it won't go down that much." Well, it's still going down, and property and real estate values are still going down. I want to tell you one thing: that real estate values is the real engine behind the United States of America more than anything. It is, I think it's close to half the economy, directly and indirectly, construction, with everything that goes on around it. And if it's still going down, you can expect the economy to keep going down. It's a good barometer as far as in the United States, but not globally. As far as in the other side of the world, and the so-called BRIC nations and beyond the BRIC nations, emerging markets, I think the world economy is probably going to be pretty strong overall. And but really, when you look at that, it's like there's just too much fluff and BS going on in the United States that they consider the economy. Real construction for something is essential. Real energy is essential. Real mining is essential. None of the crap you see on the TV. It's a bunch of garbage. As far as this is an excellent article on Goldman Sachs. It's also on Wikipedia. Wikipedia, sometimes I also agree, they kind of steer shy of a lot of things, especially if it's too critical of, I'll say it, our friends in Israel, okay? Because if you criticize that place, I know you're off limits big time, and you won't be in Wikipedia too much, that's for sure. But as far as getting kind of general I had to throw that in there because that is one political hot topic I see on Wikipedia. They stay avoid pretty much a lot of details, too controversial. But as far as Goldman Sachs, this was written by John Kenneth Galbraith back in autumn of 1929. Well, he says that the autumn of, I don't know when he wrote it, but it was about the autumn of 29. He says the autumn of 1929 was perhaps the first occasion when men succeeded on a large scale in swindling themselves. So, I don't know how true that is, but I think there's some truth to it, because sometimes people do outsmart themselves. They don't see the most blatant, common sense, fundamental things. Paper, we're supposed to represent real goods, like electronic markets are supposed to represent real goods. If you don't have real production of goods and services, and I'm not talking like entertainment as being the main production of goods and services, you're probably, it's all fluff. It's all fluff. So, I mean, that's getting right back to basics. But talking about Goldman Sachs Trading Corporation, it had its firm's reputation hurt for several years during the stock market crash of 1929, which, same old garbage. I mean, history repeats itself, right? But as far as some of the things they were talking about, how they took write-offs in 1 year and their tax rate was effectively 1%, I don't see. I think that is basically a kind of a smear, because if you have a tax write-off for 1 year that goes back for a lot of bad debt you had and you're able to write it off, I mean, you're not going to write it off or split it out for future years. It's against the rules anyway, more than likely, that you would take it effective whatever time it is. So if they had an effective tax rate of 1% because they had losses and they posted them all in December, I mean, that's correct. I think they shouldn't be criticized for that kind of thing. But it does look bad because their tax rate was effectively lower. But that's because of losses in that 1 year. Yeah, I know the big accusation between a revolving door of Goldman Sachs, Wall Street, whatever, and the government. Well, I'll tell you what, it's been like that for the last 100 years. It's people wake up when they get hurt financially themselves, or they see their accounts going down. They don't say a word when everything's going normal. So I think it's nothing has changed. Not saying it's right, but nothing has changed. This is nothing new. So it's well, it just comes back to a matter of honesty. But this is about Morgan-Stanley, and same thing off of Wikipedia. You know, the Finance Industry Regulation Authority, FINRA. Now, FINRA is a good site. You can look up a lot of information about there. You know, we looked up Bob Chapman's broker licenses that he had and the ones that he didn't have, and you know, I questioned why is this guy giving out so much advice to millions of people like he's the guru of everything when he didn't have a Series 7 license even. I call that very suspect. Not that all his advice is bad, but I think he's just a talker. And but about the FINRA, and this was when he had a settlements going against Morgan-Stanley about I forgot what it was, but what happened was Morgan-Stanley accused said that they lost a lot of emails prior to September 11th, 2001 in the terrorist attacks on the World Trade Center, that they lost all their emails. So anybody that was trying to had cases against him, arbitration cases against him, Morgan Stanley, that did not keep backup data for themselves in paper or email storage or whatever, if they didn't have that information, Morgan Stanley claimed that they lost everything from 2001, September 11th prior, but they were able to produce other emails. They just lost the ones that they had arbitration cases on against them. Well, if you lost your information, guess what happened? You only got a token amount of money as a result of the settlement, you know, for your settlement. So I'm going to tell you, you know, just with anything, not that people on this YouTube do this, but I keep backups of the backups and backups of everything, paper, all kinds of different ways. And, you know, I'm pretty careful with information. Well, I'm very careful with information. So, you know, if you're going up against somebody or whatever, or you need information on people, it's you better have it correct, you know, because you can't rely on that should go along with your personal financial records too. You shouldn't rely on the whole system that you can point, click, and there it is. I mean, I always get paper statements on everything. That's what I do. I don't care if it costs, you know, I don't care if they want me to sign me up on this and that. I get paper on everything too. That's not just old-fashioned, because something like this happens, you got to have the paper. You got to have something to show something. And who the hell knows? This is Jim Rogers' latest. He's talking about he doesn't think gold will go to $2,000 an ounce in 2011. I don't know. Tell you the truth, it might pull back again. I think silver might go wacky in 2011. As much as there was a fear down, there could be panic on the way up, and you know, I could see it breaking 50. Who the hell knows what it's going to do? You know, when you're looking at these charts, they seem to make sense, but silver is like totally schizo. So you know, it's really hard to predict anything with that metal at all. Forget it. I mean, but just using a little common sense. You know, the market's so small. There's a lot of you know, advertisement about buying silver through like the grapevine. There's gonna be a lot more people buying into it, and I think what's going to drive the metals up more than anything is not so much the Americans and Europeans, but the Asians. They just like the metals. So I think it's a good bet. But as far as Drockton's bet, I'm going to tell you, I think these two bets are pretty good. I don't know what's going to happen with the markets, but I think these stocks are going to continue to fall. So I don't think you'd lose money. That's just my take on it. As far as these two, I think he's okay on that. I don't think they're going to go up.